Welcome to today's market report. European stock markets are set to open lower on Tuesday, consolidating after Monday's sharp gains as investors try to balance signs of a global economic recovery with concerns over the increasing number of new coronavirus cases in the US. At 7 o'clock this morning, the DAX futures contract in Germany traded 0.7% lower. CAC 40 futures in France were down 0.7%, while FTSE 100 future contracts in the U.K. fell 0.7%. Sentiment was damped slightly by German industrial production data, which rose by 7.8% in May, a sharp rebound from the drop of 17.5% in April, but slightly less than forecast. Factory orders data released on Monday has shown the same pattern. Additionally, Italian oil major Eni joined larger rivals Shell and BP in flagging asset impairments of around 3.5 billion euros due to the lower outlook for energy prices, while French food services and facilities company Sodexo said revenue for its third quarter of fiscal 2020 dropped 30% due to the pandemic. The big European cash indices gained between 1.5% and 2% on Monday, aided by a surge in Chinese shares as well as buying on Wall Street, backed by a sharp rebound in U.S. services industry activity in June. That strong jump in the U.S. ISM manufacturing index, all the way to 57.1, was the latest in a string of June economic releases that offered hope that a meaningful global economic recovery was in progress. However, the fly in the ointment is the ever-increasing number of COVID-19 cases globally, but particularly in the US. New coronavirus cases have surged in several states. Texas, California, and Florida registered record case levels over the holiday weekend, forcing some businesses to close again in a setback to the budding recovery. Atlanta Federal Reserve Bank President Raphael Bostic to say Monday that the U.S. economic recovery is in danger of stalling. Oil prices edged lower on Tuesday as the continued growth of new coronavirus cases in the U.S., the largest consumer of crude, weighed on sentiment. The U.S. death toll surpassed 130,000 as of July 7th, according to data from Johns Hopkins University. Later on Tuesday, the American Petroleum Institute's report on the level of inventories will be in focus, after the previous week showed a draw of 8.1 million barrels. Investors will be looking to see whether the fresh wave of coronavirus infections impacted the consumption of oil across the country. At 7 o'clock this morning, U.S. crude futures traded 1.4% lower at $40.05 a barrel. The international benchmark Brent contract fell 1.4% to $42.52. Gold futures rose 0.1% to $1,794.45 per ounce. On the FX front, GBP/USD repeats its inability to stay bid beyond 125, while taking a U-turn from 125.18, currently around 125.02 ahead of London Open on Tuesday. The pair struggles for a clear direction amid fears of a hard Brexit and the US dollar's market reaction amid a day offering a light calendar. Even so, the ongoing departure talks between the EU and the UK in London becomes the key to watch for immediate direction. Other than the Brexit, fears of the coronavirus resurgence in the nation due to the government's easing of lockdown restrictions gained additional strength after British authorities shut doors for official publishing of routine virus data. Hopes that Chancellor will unveil a major set of relief package to the British people seems to challenge the bears. Also, on the positive side, could be the US dollar's weakness despite printing upbeat figures. According to the UOB Group, cable's stance is now pointing to further upside in the near term. EUR USD is now trading below the 113 level after having failed at 113.50 resistance for a third time. Therefore, Tuesday's 4-hour chart is pointing to a triple top at the 113.50 mark. This came out obviously on the back of the German figures we talked about earlier. At 8 o'clock this morning London time, the dollar index was up 0.2% at 96.896. The dollar had fallen sharply on Monday as better than expected US services data strengthened investors' expectations for speedier economic recovery. This is today's market news. Thanks for listening. We'll see you next time.